But they who wait for the Lord shall renew their strength. They shall mount up with wings like eagles. They shall run and not be weary. They shall walk and not faint. Exodus chapter 15, verse 2. The Lord is my strength and my song, and he has become my salvation. This is my God, and I will praise him, my Father's God, and I will exalt him. 1 Corinthians chapter 10, verse 13. No temptation has overtaken you that is not common to man. God is faithful, and he will not let you be tempted beyond your ability. But with the temptation, he will also provide the way of escape, that you may be able to endure it. Philippians chapter 4, verse 13. I can do all things through him who strengthens me. Isaiah chapter 41, verse 10. Fear not, for I am with you. Be not dismayed, for I am your God. I will strengthen you, I will help you, I will uphold you with my righteous right hand. Deuteronomy chapter 31, verse 6. Be strong and courageous. Do not fear or be in dread of them, for it is the Lord your God who goes with you. He will not leave you or forsake you. 2 Corinthians chapter 1, verses 3 to 4. Blessed be the God and Father of our Lord Jesus Christ, the Father of mercies and God of all comfort, who comforts us in all our affliction, so that we may be able to comfort those who are in any affliction with the comfort with which we ourselves are comforted by God.
Good morning, everybody. Sorry for the wait. Can y'all let me know if you hear me okay? Just let me know in the chat. Having some issues this morning, so it seems. All right, perfect. Good morning, Hitman, Tony, Fritz. It's been a pretty chaotic week, right? Pretty crazy what took place. Apparently, China turned around and did some very aggressive rare mineral restrictions in terms of imports, trying to, I guess from what I was hearing, basically make it hard for us in the US and any Western countries to get access to certain minerals. And the president heard about that and sent out a tweet and it just, went crazy. So yeah. From what I was able to gather, I guess this was anticipatable to see the decline. I didn't anticipate it was going to be so aggressive. But, it is what it is. What goes up must come down, right? Let me see, yes, but you still see 87% of things. Yeah, exactly. Exactly. We kind of figured that there was going to be some type of drop soon, like at least a shallow decline. Um, this is a good indication of or reminder of the risks that are involved in the marketplace. I sent out a post earlier about something that I heard about yesterday. You go pull it up. I think it's important for everybody to look at. If I could find it. So apparently over 2,000 plus crypto traders committed suicide from what I've been able to hear about. That's tragic, right? But this is a good reminder, whether you're in crypto or just in investing in general, you need to manage your risk properly and set your expectations correctly. That's why one of the first things in my list of trader development, there's a reason that mindset and expectations and discipline are the first thing that I teach, that I talk about, that ICT even talks about. There's a big reason, because this is an industry where there's unlimited risk, but there's also unlimited reward. But you have to be able to manage yourself properly. If you're going to be trying to get rich tomorrow, you might as well just stop. Don't even invest at all. Because this industry, for those that may not know, it has the highest suicide rate out of every single profession. And it's not because it's difficult. It's not because of it's not because of anything other than people's mindset and their expectation. And social media amplifies the good, but never really spends much time on the bad. I almost took a buy. I have some friends that took a buy right before the drop took place. But because there was rules that we follow, we didn't take a trade. So being disciplined saved a losing trade, right? And just saved potentially a moment in price where your stop wouldn't have been respected. My stop wouldn't have been respected. Your stop wouldn't have been respected, right? So it's so important, that we think about this stuff before we even get into any trading related stuff. You got to manage your expectations properly. Pay attention to what's going to happen a year from now, 2-3 years from now. Don't be looking at what's going to happen tomorrow in terms of expectation. You may take a loss tomorrow. Well, tomorrow's a holiday, so we're not really going to have much. We'll talk about that in a minute. But you want to make sure that your mindset is correctly being managed. You want to make sure that people you're listening to are not trying to sell you the whole Lambo lifestyle. It's good for marketing, you got to admit. But again, this industry is hard. It's not something that you're going to walk out here and just magically become successful. There's a lot of work that's required. There's a lot of mental skill sets you need. There's a lot of patience, discipline. And most human beings on this planet don't have all those characteristics, right? They don't have those skill sets. But all those skill sets are learned. And in an age of TikTok brain, okay, and bite-sized things and people's attention span being as small as a squirrel, being patient and having these skill sets I just mentioned, you're part of a minority of people. You have to convince yourself about this reality. And those that do, obviously they see a lot better progress. They see that trading's a lot more fun. It doesn't become like a torturous activity, or something that's life and death every day. It's already stressful enough. You don't want to end up having health problems later because you can't manage your stress properly because you never learned how to do it or even tried to learn how to do that. This is not a game. This is not a casino, unless you treat it as such by just gambling everything and not having a plan. This is a business, okay? And, seeing that post, I just felt like I had to mention it. I mentioned it to my private group. I think I sent it to the free group too. But again, that's not stuff people like to hear. They don't like to see that stuff. Give me an entry. Like, that's what people want. What's the model? How do I determine bias? All those are important things, obviously, but you still have to also pay attention to reality. Okay, and I will be the first one to say these types of things because I had to face this type of stuff. The only person that I had telling me this when I first started trading was ICT. Everybody else that I was learning from in terms of mentors, they were all on this sell you a dream thing to keep you hooked. So eventually you have to learn how to get out of that mindset if you maybe are there right now thinking that, oh, I'm going to quit my job, I'm going to buy a Lambo, I'm going to do this, I'm going to do that in less than 6 months. It is possible. I have some students that have crushed it in a little bit over a year, and they've only been trading for less than 3 years. But that's not a common thing, and everybody's different. Everyone's upbringing is different. Everyone's mental challenges are different. Everyone's skill sets are different with discipline, risk control, respect to risk, and all these other things that are kind of outside of like the technical entry portion of things. So look at your journey as a special event, a special situation. Don't compare yourself to anybody, including me or anybody else you see on social media, because comparison is a thief of joy at the end of the day as well. So this is a business that you're trying to become good at, okay? Only take advice from people that are willing to do this type of stuff. Go live, show you things, right? They don't have to show you bank statements and, you shouldn't be demanding people's financial status, okay? Because you wouldn't probably feel comfortable doing that either. But they have to, at a minimum, come out on social media, if they are public, and at least call the market. Say it's going to go here and there and why. And then test them over months. Don't test them for a week. They could get lucky. That's why I've been live every single day in my private group for 3.5 years. But then also here on YouTube, much, much more this year than I really ever have been. And it's been consistent. And it's easily verifiable by just hopping on these calls and watching how things play out every week. And they do. Right? So make sure you have that filter with anybody else you listen to. I know a lot of you guys probably listen to some other ICT traders too, and there's nothing wrong with that, obviously. But you want to make sure you don't pay attention to anyone renaming things. You don't want to pay attention to anybody that doesn't do this. If they just have videos that they post after the fact, you could kind of justify it if they're calling the market on Sunday with a recorded video, and then by the end of the week, it plays out perfectly, and then maybe they're updating as time goes on. But even that, it's like, why can't you go live? You don't have to do executions, although that's what people want a lot of times. They want to see what kind of money you're making, even though they're not able to spend your money. And it promotes a fake reality. Just because I make $1,000 here, $2,000, $5,000, $10,000, and maybe you see that, doesn't mean you're going to be able to do that. That's why I personally don't show that type of stuff, because I don't want the expectation to be, oh, he's doing it, so what he's teaching me, I'm going to automatically be able to do it. No, I want my focus to be on getting you to understand the concepts, see me doing it over and over, calling the market, and it works out. And then you could put 2 and 2 together for yourself and build that reality in terms of the financial success through your own imagination, not because of someone else, or because of me or anyone else. This is why ICT also has the same mindset. That's who I learned it from. The best way to teach is going to be, to focus on what matters and teach people what matters, not, get people hooked onto how much money you're making, and most people are doing that on social media. But yeah, I just wanted to kind of mention this stuff because that's tragic that 2,000 people literally killed themselves because they're probably over leveraged, gambling in the market, thinking that crypto is going to go to the moon tomorrow. It probably will still, because the utility behind a lot of these companies that have innovative tech backing, right, and actual use cases. But again, no matter what you're investing in, you should never, this ain't financial advice, right? Obviously, a disclaimer kind of says that. But you never want to gamble or over leverage or put too many eggs in one basket. Like, you want to be able to have a multifaceted financial iron wall, okay? And that's not going to come from just one thing. You know, you want to have multiple investments, you know, and then maybe you can't do that right now, right? But you eventually will, you know, master one thing until it's successful, and then once you're successful, you could then diversify. You know, I put all my eggs in one basket in terms of what I'm trying to do as a career, which is this, but that's kind of different. You know, it's a different scenario. There is no backup plan. You know, plan B is to make plan A work or be homeless. Okay. Like, that's just, you know, maybe that's not the best idea or the best advice, but, you know, for some people, that's what it takes. And you at least got to give yourself the best chance, you know, and obsessing over something for a while until you really learn, and then maybe cutting back a little bit, going into other things later once you already have one skill set. I mean, I guess that, you know, in my opinion, that's decent advice. But yeah, you guys obviously will make your own decisions. But again, I just want to make sure that we start this week, especially because what happened last week was dramatic. Well, on a higher time frame, it's not really too dramatic, which we'll look at in a minute. But go into this week remembering that people that didn't manage their risk properly literally committed suicide. Okay, 2,000 of them. And that's unfortunate. You know, God rest their soul. But, you know, they're 2,000 of many. You know, this has the highest suicide rate because of what we talked about earlier. The mindset is wrong. Their sphere of influence is feeding into people that are doing this ridiculous marketing with Lambos and selling a fake lifestyle that they probably don't live because of trading. And then when you don't get that, things, you know, you get disappointed. And you may have taken some advice from someone that shows this type of marketing side of things, and then you fail, and it doesn't feel good, right? So always keep your eyes open for this type of stuff. Don't think you're going to get rich tomorrow. You know, focus on trading well. Run this like a business. Take this serious, and you know, things will eventually work out in your favor if you do things properly. You know, there's no guarantees, obviously, but at least here you're being put in a pretty good position. I prove what I'm doing, and ICT himself is also a blessing to the industry. So, you know, anyone that can prove themselves, that doesn't sell you this Lambo lifestyle, definitely spend more time there than you do on in these other, you know, parts of the internet. You know, because there's a lot of idiots and people with bad intentions. You know, so yeah, just wanted to start this call off by mentioning that. It's very important stuff, okay? But yeah, so going into this week, right, let me ask you guys this. What's the very, very first thing when we're looking at this, right? When we look at this and we determine kind of, you know, what's available in terms of the news, what is the first thing that should be on our mind, aside from like highs and lows? Because that's like the first thing we look at when we're on the chart, right? What would be the, you know, the next first thing? Like, there are two things that are tied together. You know, what would that be, right? When you first look at this news and then you go to the chart, whatever that is, what is the next first thing that you do? There's like two things tied, right? The highs and lows, PD arrays on the higher time frame. But what else? What is a concept that we look at referring to like the overall week, right? Or the overall day. But in this case, let's use the week. Do you guys remember what concept that is right away? Absolutely, Fritz. 100%. Power of three. Absolutely. Because before we do anything, before we even look at the chart, before we look at highs and lows, right? We look at this and we see that there's, you know, there's like 5 days, right? 5 days in the week from Sunday to Friday. Okay, and within that, there's a weekly range happening. Okay, because that is the case, right? And each day has its own role in the weekly delivery. When we look at the news events and see, what's available, we could start to frame out which days could potentially be the days that give you a strong movement, right? Remember, Sunday and Monday, generally consolidation manipulation anyway, right? So that's the start of the week. If we're thinking about Power 3, if Power 3 is present in the week and Sunday, Monday is, the beginning of that, you would expect that Sunday, Monday would go against whatever order flow you're going to come up with when you get to the chart, right? And then, of course, Tuesday, Wednesday is generally the fastest, most expansive days of the week, right? Tuesday, Wednesday is expansion portion of the weekly range. And then if a PD array or a higher time frame liquidity pool is met, after the one-sided delivery that may take place on Tuesday and Wednesday, Thursday and Friday could be seen as a potential reversal type of profile, right? Or TGIF, right? If we run into Thursday and it's just expanding and we're still a little bit away from a PD array that's logical to be targeted or a liquidity pool that's logical to be targeted, given what we see on the chart, then we may push for Thursday again, maybe even midway through Thursday's delivery, and then reach into the PD array or high or whatever the case may be, that then could trigger in a reversal response. That would lead you to TGIF, right? Then you would measure out the week, find the 30%, 25 to 30% of the range, and then in that scenario, it could be your target for the cap or close of the weekly Power 3. So all of this that I just mentioned can be thought of or should be thought of when you're looking at the news for the first time during the week, right? On Sunday or Saturday or even on Friday of the previous week, right? So that's like the first thing you really want to do and consider, because it's just what it is. So we can see with that information, Sunday, Monday is probably going to be really nothing, right? Sunday is a day before a holiday. We don't ever trade Sunday anyway. Monday is a holiday, Columbus Day, I think. Yeah. And then the day after a holiday is Tuesday, right? And we don't have any news early on, right? So the day before, day of, day after a holiday, do you guys remember what the condition is by default? Doesn't always happen this way, but I'd say like 85% of the time, this is what it is. But do you guys remember what the conditions, the anticipation for what condition it is? Do you guys remember? Is it high probability, low probability? Is it going to be trending, consolidated, right? What is the assumption when we see this type of thing for a day before, day of, day after a holiday? Okay, my brother said low probability. Fritz, you're right. Reduce risk. Hitman, low probability. Tony, low probability. Matt, low probability. Absolutely. Why? Can you guys explain why that may be the case? Why that would be the case? See if you guys remember the why behind it. Because I like to know the whys, right, for what I'm doing. Okay, after the holiday, the movement starts. Okay. Any other thoughts, you guys? Why would the day before, day of, and day after a holiday be a low probability, high resistance environment? Okay, you said the money is not there yet. Basically, smart money's on the sidelines. Tony, that's what I would assume that means. You might get caught in manipulation. We could be in consolidation. Yeah, so the reason that this is what it is, right, is because think about it. If you were smart money, right, and you were like the big player in the market and you were making millions and billions and whatever the case may be, you go away for the holidays, right? During the holiday season, this is why during the holiday season it's a lot harder to trade, or it doesn't really have many dynamic price moves, because for the most part money is out of the market right now. They're not doing too much activity because they're probably with their families. They're probably just out there living their lives as they should be, so with that being the case, right, I'm sure there's other reasons why as well in the back end internally, but for the most part, that makes sense. ICT has mentioned that as the case. And if you watch price delivery day before, day of, and day after a holiday, you'll see, sometimes the day after the holiday, especially if there's like a Fed speech like this, maybe it does explode and kind of victimize whatever liquidity was left behind going into that day after the holiday. Could be the case. It does happen sometimes. That's why I said it's not 100%, 80 to 85% of the time. But yeah, and of course on the day of the holiday, it's a half a session, right? If that, right? They close early, so it's just not the greatest time to try to push, especially because it's also the beginning of the week, right? What do I say about the beginning of the week as well, right? We just kind of talked about it, but what generally happens at the beginning of a week? If the weekly range has a power 3 dynamic, what happens, right? What could you expect reasonably? My brother, I'm reckless, said the right answer earlier. But yeah, we'll just go with that, right? You can get caught in the manipulation consolidation phase, right? Accumulation, that's a good one too. That's a good anticipation, right? Basically consolidation. But yeah, this is conditional awareness, right? This is situational awareness. This is price navigation. Before we've even gotten to a chart, these are things that you want to make sure you're thinking of. If you don't have this type of stuff in your notes, just like side notes and things to keep tabs of or keep track of, so you can understand conditions as they arise, because there's always more holidays that happen. There's always a beginning of a week, right? So this can be something that you use systematically in terms of anticipation or expectation setting near a holiday at the beginning of a week, right? Just so you can get a pre-game understanding of what could be taking place and how you need to operate, right? And of course, from those that may not know, maybe you guys are a bit new to the YouTube channel. Mondays and Fridays. Does anyone in the chat that's been here for a while, do you guys remember what the risk allocation is on Mondays and Fridays? Because we don't trade on Sundays also, for those that don't know. It's not worth it. But what do we do with our risk on Mondays and Fridays? Generally, right? Like what's a default rule that we have to consider? So you said half. Yeah, so pretty much, you cut your risk at least a little bit, at least by 25%. If you're more aggressive, if you're confident, if you know what you're doing, maybe you get more risky here and there. But as you're learning, right, these are moments in price where things can be a little bit more skeptical. You can get caught in manipulation. You can get caught in consolidation because it's a start of the weekly candle, right? So you don't want to get caught up in that without understanding what's going on. So as a new trader, as someone trying to learn Power 3, someone trying to learn how to navigate, how you should behave around certain times in the sessions and times of the year, you want to make sure that you lower your risk at least a little bit. So, and then it's good to use Sunday and Monday, that delivery as like reconnaissance, right? Like you can, pretty much use the information, right? As like the previous day's highs, previous day's lows. If it consolidates going into, Tuesday and Wednesday generally have a 70 to 80% chance of creating the high or the low of the week. So, Tuesday, Wednesday, Thursday, because that's the case. And sometimes there's dynamic reversals that happen on Thursdays if a PD array is met. This is why Tuesday, Wednesday, Thursday are the best days to trade, especially if there's no news happening up until those days. I mean, you can ironically see those are the only days that news is available. Monday, holiday. Sunday, no news. And Friday have no news. So the most dynamic price delivery is going to be on Tuesday, Wednesday, Thursday. So seeing something like this, you can also use an opinion based on like, okay, well, there's no news, so there's no trading. I'm not going to trade, right? That's a rule that ICT has mentioned. One of the things that one of the checklist points for high probability is obviously having a red folder news event. Sometimes it could still be a little chaotic depending on the news event, but you don't want to really consider trading a day without news, especially if you're new. If you have more skill, right, and you've been here for a while, obviously, if you know what you're doing, you could trade any day. It doesn't matter. Even the day of a holiday. You know, I don't encourage it, right? Like, why do that? If you know you can find setups, why not spend some time doing other things or studying or doing something more productive? You know, because, you know, eventually you'll graduate from the feeling of always needing to be in the market because you know things are going to happen over and over. So you can put yourself in front of the best scenarios. So if you're new, if you guys are newer to trading, less than a year, 2 years experience, I definitely recommend that you study the days. I recommend that you study the days that have no news. You want to study the days that have holidays. Okay? But preferably, even if you're trading on a demo, which I don't encourage you to do yet, if you're brand new, you want to at least be studying for 6 months to a year. At least. Because then you're focused solely on trading well, learning the process. If you're taking demo trades even, let alone live trades, you're focused on the money. And so you can't fully focus on the concept and what you need to be gathering from a lot of the things that you know you're being taught from, you know, whoever you're learning from, whether it's me or ICT or any of the other provably significant ICT traders in the overall community. You know, so you want to make sure that you're focused on that, because all of us have done that same mistake. You know, I wish I can go back and not lose like $24,000 in the first year that I traded, being in a rush. I wish I would have not done that, you know, because I would have that in my bank account on top of what I've been able to accumulate, you know. So we all have to kind of get out of drawdown when we shouldn't even be doing that in the first place, because it's like trying to be a doctor when you just learned about doctors, right? Like, oh, I'm going to go be a surgeon and just cut this person open just because I want to do it. I read a boot camp book about it and, you know, I feel like I'm ready. You wouldn't do that. So it's interesting how we do that here in this industry, and the risks are extremely high in general, let alone when you don't know anything, you know. So I just want to make sure that a lot of you guys that are new, because I do have a lot of new students that help on watch these replays and the lives, I want to help you set your mindset and your, like, what you need to be focused on, so you can kind of avoid some of the things that I had to deal with. Pretty much probably all of us have had to deal with at one point or another, and get you focused on the right things. You know what I mean? So yeah, hopefully the Power 3 idea makes sense. That's what you want to do every day, right? Or every week for the weekly view. Every day you want to have the same perspective just for the daily range, for the daily Power 3. You know, right when you turn on your chart, like tomorrow, your automatic thought process should go to, okay, well, what was the weekly outlook we had? Where's the news? And what liquidity is available? And what phase are we in for Power 3? Right? What could we discover from the understanding of Power 3 when we're looking at the chart? Where's the open price? How has London's high and low been treated? Where's the previous day's high and low? Right? Like, those are some of the initial things that you want to make sure you pay very close attention to. Okay? First and foremost. Right? So again, I hope all this makes sense. If you guys got questions, let me know. But yeah, let's actually move on to these assets. Sorry, I didn't have a real chance to get ready before I went live because I was having some issues. Let's see. Yeah, it's been pretty dynamic, if I say so myself. Yeah, very, very interesting stuff we've been able to witness. So yeah, we got a lot to talk about. All right, so let me just get that up here real quick. So yeah, let's look at the bonds and yields now. And again, does what I just mentioned change because we're not on the NASDAQ? Do we just not pay attention to Power 3 because we're on a different asset, right? Or we're looking at a certain asset class. Does any of this mindset change at all? No, right? Every single asset you look at, whether it's stocks, crypto, anything, okay, you want to look at the very same things. Okay, very interesting suspension block there. Talk about that in a minute. All right, so yeah, looks like we were right about that, the bonds. But yeah, so the yields have overall done pretty much exactly what we painted them to do. Okay, we wanted to see this fair value gap here hold. We wanted to see this low to that high act as a balanced price range. We wanted to see us continue to drop towards these relative equal lows I talked about last weekend. And obviously, it's came beautifully to fruition, or at least it's on its way to coming to fruition. Okay. Let me see. Fritz said monthly Power 3 and quarterly Power 3 is still no, yeah. So you definitely want to pay attention to that as well, Fritz. Quarterly Power 3 takes a little bit of time. There's 3-4 months in a quarter. So, you definitely do want to go to the quarterly chart. Look where the first day was on the month that started that had the start of the new quarter, which is September. And you want to draw a line from there and observe kind of what it's been doing. Like if we go to this quarterly chart, right? This is the new quarter, right? It's been a very small manipulation in there above the open price, right? But yeah, it hasn't really done much. We're just kind of sideways, but it has been gravitating lower. We have been able to call it lower. But yeah, I wouldn't be surprised if we do get a deeper run on this quarterly perspective. Definitely got these levels down there. Looks pretty nice to me. But of course, we'll see. It's going to take a little while for this to manifest, but we also got relative equal highs up here too. So we'll just have to wait and let this play out a little bit. But for now, see, that's the quarterly. We got an order block here too. Let me actually mark that off. Remember, so on top of Power 3, of course, the next, a thing that's tied with the very first thing you should be thinking about with Power 3 is the current high, right? Current low on these higher time frames, and then of course the previous high and the previous low. So this is the previous quarter's low. So even if it was to get down into this level and try to sweep some of this out, it's going to have to target that first. We also have this one as well. We're inside both of these candles in here. So until we break out of this low and that high, or this low or that high, those are the main objectives. Okay, just to keep it very, very simple, very, very easy, repeatable liquidity mapping process. And then of course PD arrays that are around us and stuff like that. They're also very important. But yeah, so if we go to the monthly chart, so yeah, that's a quarterly low. This is a quarterly bullish order block. Okay, so we'll keep that in mind. Let me actually go. Let me actually grab this. Then we got the 50% of the quarterly order block there too, so we'll keep tabs on that. So we got this to basically tag the low of this. We are kind of inside of this other order block, the larger one. If we take this high extreme to the low extreme, we can kind of get an equilibrium gauge. We're pretty much smack in the middle of the range high up here to the range low. Buy side taken here, sell side taken here. So we may be in a mode of continued consolidation. You see how price has been stuck. Hasn't really been doing much. It's just been sideways. Again, observing the overall range like this, right? Look for where it took out sell stops, took out buy stops, find the extreme low that did that, extreme high. Measure out that range. If you're hanging around equilibrium, what is generally going to be the condition that you can anticipate? You guys remember? Just as a reminder, see how many of you remember. Yep, consolidation, Hitman, exactly. Does it always hang around? For the most part, majority of the time it will. If we're on the higher time frame and we are literally going sideways like this, and you see that we're at equilibrium, you can make a justification for that consolidation. And until it starts to really break out, you're going to want to make sure you're very cautious. Has that stopped us from being able to call this market lower as we have been? Right? Has it stopped us from being accurate in that regard? No. Right? But you do have to have an expectation set properly, like we talked about earlier. If you're inside a consolidation like this, hanging around equilibrium, it's not reasonable for you to be overzealous and try to get behind hundreds of handles or hundreds of point moves. Just look for near-term liquidity, right? Previous days highs and lows, weeks highs and lows, any type of equal highs and lows that you could see. But here, let me actually clean this up a little bit. Just put the... So yeah, now we got the quarterly equilibrium of the consolidation. All right, so we'll keep tabs on that. October's open price was here. So now we can kind of get a quick view of the monthly power 3 so far. Let me actually take these two off. Let's just look at these highs real quick. I guess it was a slight SMT here. Right, lower high here, higher high there, and then price kind of fell out of bed. And again, we got relative equal lows on this one, relative equal lows on this one too. And I think there's a deeper no. Yeah, two of the three have a really obvious equal low target, and unless we get displacement that breaks above this high here, basically respecting this level, right? Maybe sweeping this, displacing up there, basically taking stops, then shifting market structure above. Unless that was to happen and 3 PD arrays get violated, I'm going to just continue to try to see this go lower. Okay, and at least until we sweep out the equal lows here. Same with this, right? And if we do break down below those equal lows, we do have, here, let me actually take this off. And we kind of see that quarterly shift that unfolded right from it going higher, stalling out, and then shifting, going into the new quarter. You can see that within the 20th and 60th day from September 1st, which is the month that starts the new quarter or has the rollover towards the 16th/17th day. And then, of course, the 20th day took place, right? A little bit beyond the 20th day, within that 20 and 60 day range, you could see a displacement took place, a shift took place, and now we got that continuation taking place, which we were ahead of and have been calling for the last couple weeks with accuracy. Okay. So yeah, we're gonna wait and see how this wants to deliver inside this order block. But let's actually just pull up one for now. Okay, and again, we got these equal lows down here. We do have these relative equal lows, that first layer. Okay, we do have a run on stops up here. So buy stops have been basically purged out, right? Swept that, then we shifted market structure. We got this fair value gap. We did set equal highs up here. Let me actually check this high. This high is 784. Yeah, so I guess, oh. I guess it did peak a 785. So if you look like right in here, can you guys see that? Let me see. I'm not sure if it's cut off. No, okay, yeah, you guys can see it. So right up at the top of the screen there, you could see open, high, low, close. That's what I was basically looking at, hovering over the candle. 4.785%. Then I take this high, 4.784. So it didn't necessarily even breach into that fair value gap. So this fair value gap here was left available. And this is a good visual representation of the balanced price range idea. Right, this low to that high, followed by a massive displacement. It's not expected for it to want to go deeply into the fair value gap, if at all, because if it's going to continue to drop, that should be treated as a BPR. Okay, these up candles in here, I'm sure that's probably an order block on some time frame. Let's see. Somewhat. We do got the wick in here too, right? Another wick, but followed by this displacement that overlaps it. So there's really no reason for it to have wanted to come up, right? And as such, we've been correct, right? We said that it probably wasn't going to. If it was going to go up there, it would probably be very short-lived and then decline. Unless it was to overlap this and invert it, in that case, we would have then looked to seek the buy side. That didn't happen, so we continue to trust downside, and we have been rewarded for that. And then, of course, like I said, you see the quarterly shift behavior going into the new quarter, seeing how that kind of unfolds. After the 20th day, within the 20th and 60th day, there should be either continued move or a complete reversal against whatever's happening in price. Right. Again, all this same stuff is utilized in every asset, right? All these different concepts that we're talking about and we'll talk about, it's all universal unless I say otherwise. You know, because there's some stuff for like Forex that's specific to Forex. You know, some things, you know, are just asset specific, but all this stuff is not, right? It's all just same stuff. If this was the NASDAQ and this is what it looked like, I'd be saying the same thing. Okay. And again, remember the yields have an impact for the most part, or should have a heavy impact on the DXY. So if this is going lower, right, it's reasonable to anticipate a potential decline on the DXY. We have been seeing a lot of manipulation in here. It's been very chaotic. There hasn't really been much of an economic driver pushing this higher, but you know, we'll kind of see what happens. Right, if this does go lower though, we do want to keep our eyes and attention on whether this weekly chart here is going to be delivering something that's going to basically smash off this wick midpoint. And then we have the gap in there, of course. I guess we could keep that. But more so this wick here, right? This low to that high 50% level. We've now closed well below it. So we'll see. If we get like massive displacement that closes below these candles here, it should be like a 2-day order block. I guess it's more useful to use this here. But we'll come and take a peek at that when we're done with this. But yeah, so I'm going to just continue to believe the same things, right? Until we get down below this low, I'd like to see what happens. But even if it sweeps that low, the only way that I would be looking to change my opinion on this is if we start really rapidly breaking buy-side liquidity. Maybe there's an SMT that forms or something like that. But I'd like to see a shift in market structure on the higher time frame to really determine that this is going to stop going lower. We are getting into a discount, right? We do got the consolidations equilibrium down here, right? And we do kind of, you know, have a gap down here too. So actually, let's mark that because that might become significant. But yes, so I'll continue to try to assume that this is going to go down there. We have this inversion on the weekly. We got a monthly low that was just taken out, so we can kind of remove that. Quarterly bullish order block here, 50% of it. Is that what that is? Let me see. So quarterly order block. Quarterly order block. Oops. So let me actually remove that because I was basically talking about this one. This is not technically something overwhelmingly valid right now. We are trading inside of this though, so this is definitely something to watch, right? On the quarterly perspective, right? We'll go to the daily now. So yeah, we're trading into that. So we'll see how price wants to behave around that, right? And again, whatever this does is going to impact what the DXY does. Okay, so if this continues going lower, we should be able to reasonably expect that things should be able to drop lower. Okay. Let me see. Fritz said, "Are we in a larger market maker model inside the weekly chart?" Yeah, it kind of looks like it, huh? If that's the case, I mean, it makes sense, and our narrative is correct. And if the market maker sell model does continue to unfold, right, it is a very, very sloppy one. But if it was to try to unfold, we do have these relative equal lows down here, which is something I marked out, right? So that could very well be the case. You know, we have been calling this lower, right? And of course, if we're going lower or higher, we're always in some form of a market maker model. So I like that you pointed that out. Sometimes I kind of just like don't mention it because we talk about it all the time. It's just second nature. But yeah, you should always remember that we're always in some kind of a market maker model. This low here, this retracement to go higher just to go lower, that's a market maker sell model you want to think about. Okay, this low to that high with the intention to go lower, that's a market maker sell model. Right, this high to that low, if it was intending to go higher, right, which, you know, there was a thought process before this dropped and shifted market structure that it could, and possibly seek the buy side up here. We see that it went up there, kind of delivered, you know, distribution here. Second stage distribution did not allow, right, for us to continue and get the high. So this was a failed market maker buy model with a shift, creating a market maker sell model. Right, so you can see how market maker models can start assisting you in bias and narrative and like validation as well, you know, because once you're able to identify that one of them fails, like a market maker's buy model, for example, like it did here, once that fails and you start to see the pieces to a market maker sell model and you go to the higher time frame and you could make an argument that price is going to go lower, you could start to use it as a tool to help validate an overall change in delivery, aside from all the other tools that we use. But yeah, that's a highly accurate, consistent way of doing things to validate things once you understand market maker buy and sell models. Okay, so yeah, Fritz, that is definitely a possibility. I would keep that in your notes as we walk forward. I encourage all of you guys to keep that in your notes about this asset walking forward, okay? But yeah, so that's kind of my opinion on this. We do got Friday's low here, right? So going into Sunday, Monday, we're going to want to make sure we keep tabs on the Friday's low, Friday's high. And we also want to keep tabs on these equal lows here because that'll be my main target. I wouldn't be surprised if they open up, retrace a bit, try to pretend that they're going to go higher, but fail from this low to that high, right? Maybe they use that. And price can maybe hold within that area. If we look at So we got a new week opening gap down here. We got a gap in here. That's kind of interesting. So we do have a new week opening gap that's like resting right there. So very interesting how it's sensitive at that level, huh? We got another gap in there. So we got lots of new week opening gaps in the relative area that we're in. So we may have a high resistance issue digging deep down into this. We also took this low here. And now if this was a failure swing, it'd be very, very easy for it to get down there. But when you have a stop hunt already, and we're reaching for a low that already took some stops, you got to consider that it may put us in high resistance, especially in a world environment that we have right now. Things are a bit chaotic for the U.S., for everybody. You know, everyone's kind of in this together. But so yeah, that may be something that happens. Does that mean that there's no opportunity? No, it just means that you got to, you know, keep that in mind when you're managing a risk. But yeah, so that's essentially all the important elements here for this asset. Again, if this does end up going lower, that should pull the DXY. I'm assuming that it will. So we may see the DXY give us this failure in here to break this high. If it does, and we start displacing, closing below some of these levels in here, we may either consolidate or start to reach back lower again. And again, if it does look to get back down below the lows here on the DXY, eventually, you know, we're not going to assume that right now, but if it does show like next week and the week after that we do want to dig lower, once it reaches down here, it should be considered high resistance. And we'll see what happens in that regard. We'll get to the DXY in a bit. But yeah, so that's my opinion here. These are some of the important levels I'm watching for the bonds, or the yields. And now if we look at the bonds, right, take a quick glance at the quarterly chart for this asset. We're still just in a mess. We do have relative equal highs here on the 10-year and the 5-year. So I wouldn't be surprised if they attempt to get up there. If we do get above this candle here, that's a bullish order block. So if it trades into that, we'll have to see and observe and study how that's going to either hold or not. Let me see weekly. Seems as unfinished business. Yeah, for the yields, it does look like there's unfinished business. That's for sure. So we'll continue to remain bearish. Try to see if we can get this to go higher. But yeah, when we're looking at this asset, if we look on the weekly, let's actually go to the monthly. We do have got this inversion here. So we do have this monthly fair value gap that's kind of held price. This inversion fair value gap. Let me put that there. So we'll kind of monitor what it wants to do here within this. We do have a order block here. We do have a stop hunt here. Make this a little bigger. So this is kind of where we've came from. I believe that was SMT that led to this too. Yeah, there was that SMT there. And it's just been continuing to run higher. You notice how a lot of the stuff that we've talked about for months still is holding up? It's still holding up, the things, right? That we used to assume that this was going to go higher. Right? It just shows how important the higher time frame is and how long it can keep you on the right side of the market if you really pay attention to the higher time frame. You know, but if you're stuck on those 1 minute time frames too often and you never give yourself a larger horizon, and try to think further ahead, you kind of miss the opportunity to be in sync with the market. We've been in sync with this and what it's been doing, even when it's been a bit chaotic, because of our understanding of the higher time frame. Right, so yeah, with that being said, again, I do still want to see us try to get up above the highs up there. We do have a order block here. Monthly order block. Kind of get rid of some of this. Go to the weekly chart. Do got that order block that's held up, right? I called this last week, right? Well, for the last couple of weeks, we've been watching this fair value gap, this order block, this high to that low being treated as a BPR. We've overlapped this fair value gap here. We also have overlapped this one too. Okay. And now price is really trading up into this. Let's see, is there a wick? Yeah. So we will break this wick down. So yeah, we use that. Okay, so 25%, you see how I hit the 25%, it's caused a retracement. Now we're pushing up to the next level is 50%. And then of course, 75 and then potentially all the way up here. What's up here is something interesting. We got relative equal highs. Okay, and then that also is accompanied with a fair value gap. That is on the weekly. So yeah, we'll keep that in mind. That's a little bit of ways away, so we'll obviously have to continue to monitor this order block, right? So let's actually drag that up there. So yeah, if we get above this, we're kind of above the open already, right? So we'll see if that can act as support, basically an order block. We're seeing down candles supporting price. So until that stops, we're going to continue to want to push price to the buy side in this asset. And remember, guys, why do we spend so much time here? We basically spent like 20 to 30 minutes on these assets alone. It's because when we understand what's happening in these assets, it's much easier to have a strong conviction behind the opinion we have on the other assets, DXY, currencies, indices, commodities, right? It's just the way it is. There's no way around it, and I think I would be doing you guys a disservice if I just jumped to the NASDAQ and the indices, the DXY and all those other things without using this as my baseline, because this is how I do my analysis. This is how I'm so accurate. This is how I'm able to call week to week, month to month, quarter to quarter where price is going to go, and I've shown it this year. This is a huge reason behind that, because I understand the whole market as a whole relating to the things that influence the indices, and that builds trust, and I don't want to leave things out because people don't want to spend time and listen to the video, just so I can cater to them, like I just, there's a lot of students that like the in-depth, and they quite frankly do the best in terms of results, versus students that just want the NASDAQ, because that's not how the market works. You know what I mean? So I just wanted to give you guys a reminder of that. Okay. But yeah, so these are my areas here in this asset. Let me actually put the 2 for the order block there. I think we can kind of get rid of this one, clean that up a little bit. But yeah, we got the order block here, and then we got the high, and then we got the 50%. So again, until down candles start getting violated, this is showing us that we have bullish order flow, right? And this is all happening off the heels of us sweeping out the low. So as long as down close candles and bullish fair value gaps and swing lows continue to be respected, and things keep inverting to the buy side, we're going to continue to use our judgment to continue to reach for buy side liquidity. And of course, we got the other levels up here too. Actually, make it smaller. Yeah, we'll keep it small for now. All right. So yeah, we'll see if we can open up. Think of power 3 from the weekly chart. All right, we'll see if we can open up, maybe purge the high a little bit, or leave the high as a failure swing, and then come back into the order block open price, which is here. And then we'll see if we can get sensitivity in that area that can send us up to the buy side. And again, we have this up here. This is a equal high / weekly fair value gap. I would not be surprised if that is our target. I mean, that looks extremely clean. Looks extremely in your face, at least for us. So we'll see if that can't be fulfilled. Right? I do want to request from you guys that you like the video, subscribe to the channel if you haven't already. If you get value from the content, obviously, definitely if you could do that, it's much appreciated. If you have anyone that you think could like this content or maybe can find value, definitely spread the word as well if you can. If you could do me that favor, I'd really appreciate it, because you guys are helping me help other people. You know, we're kind of doing this together, so I appreciate you guys in advance. But yeah, this is my opinion on this. Remember, going into the new week, we're going to look at Friday's high and Friday's low. We're going to look at previous week's high and previous week's low, right? So that's this candle. What's in close proximity, right? We have the down candles here. That's an order block. We have the swing low, and then we also have this swing high up here, which is another previous week high. So that's our close liquidity. Even if we do end up going all the way up here, this is what is important right now. These wick quadrants are what's important right now. Whether we respect this monthly inversion for value gap or not is what's important right now, because you could see all these things are so close to price, right? So yeah, in a nutshell, it's pretty much all I really see as important in here. Then we got this monthly order block. Let me go double check with that. Okay, yeah, it's a monthly bullish order block. Okay, and you could see the reaction off of that too. It's pretty amazing. What a beautiful response, right? So now we've kind of changed state of delivery entirely from this. And you can kind of see how this weekly perspective, how that was utilized inside that monthly bullish order block. Right? You can see how beautifully it was respected. It's pretty nice. All right. So yeah, hopefully that makes sense. Do you guys have any questions about this asset or the other asset? The yields? Tony said that's what makes this class amazing, because it shows you the importance of higher time frame and going into the market weekly. Yeah, and how important it is to be thorough, Tony. I mean, it's pretty incredible. Like, wouldn't you want to be thorough if you were like a heart surgeon, right? Just because they make hundreds of thousands of dollars, does that make you feel like, yeah, I want to do it quickly and not be thorough and possibly risk killing somebody, or in this case, killing your account, you know, or undoing a large amount of progress in terms of time and possibly gains because we don't want to be thorough? Like, is it really worth not being thorough? You know, is it really worth it? No, I don't think so. But yeah, I appreciate you saying that, Tony. So you could see how that plays into the week, or into this week before it even opens up with the bank holiday. Yeah, the things that we do, Tony. I think just what you just said right there is kind of highlighting this. But the stuff that we do, how we do our analysis, how thorough it is, and all the parts that we talk about that are so repeatable over and over, you can kind of start to visually see what you want price to look like, right? Or what it could look like, what you can anticipate it's going to look like before it even happens, right? Of course, it comes with time, right? And because our stuff is so repeatable, it's pretty much the same thing every single week, and it delivers like gangbusters. It sticks, right? And then your reticular activating system starts to fire on all cylinders. So whenever something looks similar, your anticipation becomes even more confident, or you become even more confident in your anticipation skills, and you can kind of visually predict what's going to happen. You have to predict the future. A lot of people say, "Oh, you don't want to predict price. You don't want to assume what it's going to do. You just want to react." ICT made a big point in calling that out because he's absolutely right that that's totally asinine. Like, what are you talking about? So the people that don't predict where price is going to go with a reasonable anticipation, right? What are you doing? Just putting it in there and hoping and praying when you execute? Like, I hope it goes to here. I'm not going to predict it because we can't predict. I'm just going to enter and just wing it. Like, that's essentially what they're saying that they're doing without saying it. You have to predict. If you're buying the market, what do you think you're doing? You're predicting it's going to go up. Now, whether it's an educated prediction like what we do, or a gambler, obviously it depends on what side of the fence you choose to be on. But people are just like ridiculous. They say, "Oh, you shouldn't predict." A lot of these big names too that are like really famous. Like, bro, what are you talking about? Like, you're predicting price. When you're in a trade, whether you want to believe it or not, you might as well just, face reality. Like, that's what we have to do, and we do a pretty good job of it. And the tools are very, very nice. They're very consistent, and they just make sense. So yeah, this is what we're going to look at for this. Hopefully it makes sense. Again, if you guys have any questions, let me know. But hopefully this was clear enough to understand. And we're going to just continue to watch the down candle support price. I'm assuming that that's what's going to happen here, and we're going to be able to get us up to these quadrants, which will be my next targets to the buy side, aside from the previous week's high, which is here. Okay? So yeah, and if this goes higher and the yields go lower, we should potentially be able to see the indices go higher, maybe get a rebound, and then, of course, the DXY. If it is going to follow suit with this and we're going to be correlated, we may not because there's so much stuff happening, right? There's a lot of things with China and different stuff going on. So we're going to have to really fill out what's going to take place. But if all the things gravitate towards the bonds and yields because of what we know now, based on this analysis, we should still be able to see some type of continued run higher in the foreign currencies and the indices, if obviously the market confirms that in those assets, alongside what we see here in the bonds and yields. And the yields dropping should pull the DXY lower. So we'll keep monitoring that. And if it's cracked in correlation, we just put these to the side, continue observing what they're going to do, but then we would use DXY, foreign currencies, and the three indices to kind of gauge what's happening in those assets. Just use that relationship. It's not a be-all, end-all to use the bonds and yields, but it's a supercharged tool to get you in line with where the market's going, where it could go, or eventually could go. And of course, it helps you trust whether you're in a consolidation or a trending environment. When you see the bonds and yields in line with what the trend is on the currencies, the indices, and the DXY, it is so fun because it flies, because it's fundamentally being pushed around by what the bonds and yields are doing, at least the indices and the DXY. They are, right? So being able to see that it's some of the highest probability, some of the funnest environments to trade, but we're going to have to see if it's going to do that, right? Well, it did it for a little bit this year, but it's been very off and on, which we've talked about on a pretty good amount of occasions this year. So hopefully it gets in line, but we'll just continue to monitor this and see what it does and adapt as needed, right? But yeah, so we'll see if the yields going lower has an impact on this, If it does, right, and we do fall in line with what the bonds and yields are doing, this should end up aggressively repricing. If you look at this asset here, I mean this time frame, it's not overwhelmingly convincing that it's really one-sided to do much other than try to continue to go lower. Right? We've already seen something like this take place, which was here. Right? We have been using this quarterly fair value gap for literally the entire year at this point. So we'll see if that continues to hold and be useful. We do have this up candle. Price is trading still within the range right there. So, that large wick, unless this monthly chart was to get up above this high here, which I believe is that wick. Yeah, it's that wick high up there. So unless it gets up here, it's not going to be fully trustworthy that the DXY is going to go higher. Maybe that turns out to be, maybe that's a little bit too conservative. Maybe this does lead to us getting up here, but for me, given the condition, given the scenario, what's happening in the world with the DXY, I want it to fully commit to one side or the other, especially if I'm trying to get off of something like a monthly downtrend, basically that's been dropping the whole year, and the manipulation that's happening because of trade with the DXY trying to make exports lower for our exporters, which is why it has been manipulated to go lower. It benefits exporters. With all that stuff being said, again, I would like to see a dramatic 3 PDA violation to be able to really, really commit that this is going to go higher. And of course, that would send the indices lower. But again, to be able to trust that, I need this to really break this high up here. Show little to no respect to this stuff in here. Because we already were in the face of something like this happening, right here. And we held on to the narrative, continuing to drop because we saw the order block up here. We saw that, I think there was a large wick. An order block, and then the large wick, and then of course the bearish breaker, right, this low to that high. I mean, that just flawlessly delivered when we were calling that out, which we called out real time. This whole entire drop we called out this year. And you can see how price kind of slowed down going into the summer months, and then now we're trying to kind of push out of that. But yeah, we'll see how price really wants to behave around this area. We have gotten this rejection here from the 50% of that wick, so that's pretty interesting. It did pull back into a suspension block ICT talks about, if I'm not mistaken. Yeah. Basically just volume imbalance with a large candle, and then a volume imbalance at the low too. We've all seen this before, right? We knew there was something important about this. Every time something like this would show up, because of what ICT taught prior to him saying that this is a PD array in itself called a suspension block, prior to that happening, if there was ever a gap that had a volume imbalance on the high and the low, I mean, you would just by default highlight the whole thing anyway, because he says include them with fair value gaps and whatnot. So kind of makes sense how he how this is a PD array. We've seen it multiple times before he even mentioned it. But yeah, so it's definitely pulling back into that. So we'll see how price wants to behave around that. Again, don't forget that we got this weekly wick midpoint, and then we also have this. Is it a daily? It's not a weekly, huh? No. It's a daily fair value gap. So we'll keep that in mind as well. We already took out this high, so I'll move that. Get rid of that. We already know that it delivered there. And so yeah, we got this here. Is that a wick? Is that a wick we got highlighted? Yeah, it's a 3-day wick. Okay. So we'll keep that in our mind as well for downside support levels, right? But yeah, I mean, we could kind of do either either thing in the DXY. I mean, if we're looking at the daily chart, right? If this was the sole thing we were looking at, I mean, we could reasonably see that this could potentially continue to go up, right? It has been pretty wild. I would say that the monthly chart does look like it could just be a fake run that wants to continue to drop. But I would say that looking at this daily chart, I would pretty much demand the price start to break through some of these lower support levels, right? Start to invert some of this stuff, maybe, open up and just start to really run. I mean, especially if we break down below this here, right? That'll set the stage for the fact that we are really not done going to the downside, right? But if we could stay above these levels and then price gives another run, maybe it gets back above this daily fair value gap here, I would look at that as an inversion, and then I would be targeting the upside up here. So I guess, just given what we've seen, we definitely want to monitor what this is going to do to start the week to get an even more solid prediction of what price is going to do. So that's going to be my stance. I can see a reason for price to want to go higher, but again, when we go to that monthly chart, you can make an argument that price may not even be done. You can also see that this is a very high resistance, low probability environment up in here. Okay, and why? Just by looking at what price is doing, the overlap of multiple higher time frame candles tells you that we're in a consolidation. It's not willing to be one-sided, super aggressive in any direction, other than the fact that we are still in a downtrend. And that downtrend could get upset if price gets above this level up here. Maybe creates this as a bullish order block. Getting above this high here would create a propulsion block, right? An order block within an order block. So if it does get up above this, I'd like to see a small return into it, not even attempting to get down to the 50%, and then quick expansion if that is going to be a propulsion block, because that's the characteristic, right? Mike, what's up, Mike? I'm at work. Okay. Yeah, and then let me know in the private group if you have any questions, Mike. Hope you have a good day at work, brother. Don't work too hard. So yeah, this is my opinion on the DXY. I'm gonna have a light-handed narrative, willing to be flexible. Sometimes it puts you in a position where you gotta do this type of stuff. You gotta be okay with accepting that and not force anything, because you can make an argument that this is going higher. Order flow at the moment is still bullish. Down candles are supporting price. Fair value gaps are being respected. Buy sides being targeted. But we have to, again, see how price is going to react to this because of what that monthly chart looks like. It looks like it's overlapping. It may just stay in this range, from this high to that low. It may just be stuck in here. If you do take this swing high here, this fractal high, take it down to the fractal low, we could see equilibrium is right there. So you can kind of see how prices bounce back and forth between that. Okay, so yeah, that's my opinion on that. And yeah, we're going to hold on to anything too dramatically strong in terms of opinions. I do see a reason the price can go higher, like I said, but the only way that I'll be very confident that we are going to dramatically decline is if we start really violating some of this stuff. Like this 3-day wick in here, it's going to be very influential, right? Because if we could break that midpoint and invert the suspension block and get below, some of these other levels while rejecting from the 50% of the wick up here and then resisting this daily fair value gap, all of that is telling us that we still could be continuing to go lower, right? And we're kind of just in a nasty range. So, we'll see how this respects this area. Again, if we react aggressively and don't even spend much time down here, then obviously you got to be more on the side that price is going to probably target this upper portion up here. We do got the weekly high up here. Don't want to forget to mark that out. So got the weekly high. Let's get the weekly high. And then we got the weekly low that's way down here. So yeah, that's pretty interesting. Yeah, if you take this swing low and also map out, right, from this swing low up to this swing high, we got equilibrium right there, so you do want to mark that out as well. So yeah, so when we open up, we're going to be within that previous weekly candle, right, within that range. So let me actually clean this up a little bit, right? So when we open up, we're going to be inside of this area from this high to that low. Yeah, weekly high, weekly low. We got that. We got a wick in here too. I think we can actually use that instead of the 3-day wick. I think I like that better. Yeah, I think I like that better. And so if we open up, we definitely don't want to see us get down below this wick here. It's pretty interesting how the equilibrium price level for the low down here up to the high. It's pretty interesting how that wick level is just below equilibrium. So we may open up, wick down into that, then aggressively try to reprice higher. What I can say is that if we do get down below this suspension block and we do get down to these levels in here, breach maybe this lower portion of the suspension block, and then invert the suspension block, right? And then use it as support and then start racing to the high. I'm going to be 100% confident that we're going to get up there. Let me see. Fritz said something about OTE. I mean, you could make the argument for OTE. I don't personally believe that because this high and that low is present down in that discount, I don't believe that that balanced price range is going to allow for the 62% retracement level. So that's some of the issue I used to have with OTE, is it wouldn't go down there, right? It wouldn't go down there sometimes. And it's because of the PD array matrix. It's because of things like this being present and how price operates within this stuff. And, it'd be pretty likely that, price may use something like this swing low here that led to the gap. Basically, that's the most energetic, right? So it may just come somewhat down near the equilibrium point, like where this wick midpoint is. It may simply just use that, right, and not have to come so deep into it if optimal trading tree was going to be something that unfolds. We do see that there's stops here. Okay, so there's stops right there. So we will observe how it wants to use that. But again, the suspension block is going to play a pretty significant role in what we're going to observe price doing going into the start of the week. Okay, so I hope this isn't overly complicated. Remember, power 3, okay? We're going into every single week thinking about power 3, and we want to see how price is going to behave within that logic, okay? And let me actually erase that. So yeah, we'll see kind of what happens here. We do have an inverted fair value gap here. Okay, so this is a previous day's high. Where the hell? Actually put this fair value gap. All right, so yeah, we want to watch this. If price comes up into that, can't get through it, and then displaces below this low, again, we may dig a little bit deeper into this. And then how price responds to these levels in here, that's going to determine whether we're going to take a nosedive, right? Or it'll give us an early sign whether it's going to take a nosedive, we do have this bullish candle creating a bearish order block. So right there at that open price, drag that over. It's somewhere right up in here, so it's kind of like in line with this 8-hour fair value gap. So similar thing, right? If we were to trade up into that and displace, we would then try to target some of this stuff down here, and then kind of see how it reacts, and then go forward from there. But yeah, we're gonna just assume that, you know, if we're looking at this time frame, it does look like it may want to continue to go higher. So I'll keep my attention there, especially if the indices look to fall. If we continue to see residual declines happening, we may get a rebound in the indices next week. You know, we'll talk about that in a minute, but we're gonna have to keep that in mind, and then of course see what the DXY is going to do as a result. And don't forget what the bonds and yields are doing as well, because everything may snap back into play in terms of overall intermarket relationships, and maybe that, you know, just was all manipulation because of the tariffs and whatever else. All right, so yeah, these are the levels that I'm going to watch for the DXY, kind of the perspective I'm going to have. And yeah, hopefully it makes sense. So if we go to the currencies now, this kind of shows us that, you know, we're in a pretty strong environment for the DXY for whatever reason. And it has definitely sent shockwaves through a lot of these assets, like especially this one. We did talk about this trendline liquidity possibly becoming a target. I didn't think it was going to be so aggressive, right? But, you know, things happen, right? Unexpected announcements on social media by the president came out and, you know, kicked it in, right? It really kicked this door down pretty aggressively. So it's pretty amazing. So with that being said, we will kind of reset a lot of this. Kind of get a feel for what's happening on this weekly chart. Again, we are still for GBP USD. We're still in a bullish breaker. We were watching this area in here, just watch and see how this weekly bullish order block was going to hold or not. Clearly, it doesn't look like it really wants to, at least for now. I mean, it kind of does still. We did technically close above the 50% of it again, right? We're still hanging around it. We did just sweep the lows. So I would say that if we were to displace and get back above it, that would be the time when I would be thinking that we're going to probably come back and target the highs up here. We do have this order block here, this bearish weekly order block. It's definitely showing that it's respecting it here, but it's also showing respect to this one as well. So again, similar to what the DXY is doing, I'm going to have a light-handed opinion. Okay, we are still bullish, right? We may just be tipping over here. It does look like there is a likelihood for us to dig lower a bit. Now, does that mean that we're going to come all the way down here? Probably not. You know, like who knows, right? We're going to have to wait and see when that time comes. But for now, we're hanging around this bullish breaker on the monthly chart. Okay, so we got to make sure we're watching how that behaves. We are inside this bearish order block here on the monthly chart as well. Right, and then, like I said, we're inside of that bullish order block here also. So you can kind of see what we're trapped in between and why it's not a high probability environment. Why it's not 100% assured that it's going to do this or going to do that. We have to have if-then scenarios playing out, and then see how you know, they end up unfolding, so we can make a further decision. Sometimes you need more information, and there's nothing wrong with that. Okay, and I'm sure we'll have a better idea next week, unless of course it stays in consolidation again. Then of course we'll kind of just be stuck. But yeah, we've blown out a decent amount of liquidity in here. It has closed below the 50% of this order block. So yeah, we'll see what the result is going to be from that. I do see this here. We do have that inversion fair value gap. So yeah, price does open up, come back into that. We've taken out trendline liquidity very aggressively. So those people have been absolutely destroyed. Right, so a good sign that we will continue to go lower is if this inversion holds here and then we start to displace. Because if that's the case, we got the wick down here. We have this secondary low, or third low, right? Aside from this one, we have this one. And then, like I said, we have the wick down there, the quadrants to look at as a target. If it was to get down there, right? I don't see why, given what we see here, I don't see why it wouldn't. Well, it wouldn't be able to at least try. And then maybe react if it is going to go higher to one of these levels. And of course, the SMT really supports the fact that DXY may continue to go higher. And this will just continue to go lower, supporting this order block in here. I think I'm going to actually focus more on this one, because this SMT is definitely something to consider with this decision, right? So yeah, we'll keep that in mind as a strong reference. All right, so yeah, I want to see how this is going to react in here. And depending on how it reacts in here, it's going to determine to me whether we're going to have a strong reaction from this SMT. And if we do have a strong reaction to that SMT, GBP USD has a very obvious sell-side liquidity pool, similar to the yields having their equal lows here. This has a beautiful monthly fair value gap below equal lows. So I am definitely interested in seeing if we can get that taken out and dealt with. But yeah, we'll see. Okay. And I guess that's pretty much the extent of my opinions on this asset. Let me read the chat real quick. Could be a very sloppy BPR. One thing, two. Yeah, it could be, right? We're doing a lot of trading in the same area, so once it pushes away, it shouldn't be expected to really trade back into it. It's kind of holding. It's in a holding pattern, right? Europe is, all that war and, a bunch of chaos in the UK, and, things are just really chaotic over there. That's for sure. So it makes sense that that's manifesting into their assets. So this is why Forex it's not the greatest thing to be engaging right now. You might as well trade even CFDs if that's the only thing you have access to. It's better than this. Doesn't mean there's no opportunity, but don't you want to be around assets that are moving, that have less risk? Still have risk, but a little bit more reasonable. I would think so. So yeah, I guess that's where I'll leave that opinion. Let me see if we can find. So we do got the wick in here. This one is lower than this one, so we could use this one as the more important one. We also have an inversion in here. So yeah, that's something we would definitely want to watch too. I'm not going to keep that up. You guys can put that on your chart if you want. And then, of course, Friday's low, Friday's high. We're going to have to pay attention to that as well. And then, of course, we also have Thursday's high too. Thursday's low was taken. And then we kind of rebounded. So we want to see what the reaction is here. I can tell you that if this sweep here, right below this low, gets us up above this high here, we will rapidly reprice up to here in low resistance fashion. Okay, so that's something you want to watch. We do have a bearish breaker here. I don't think I saw this last week. This right here is a bearish breaker. So yeah, that may be even more reason to believe that this is going to go lower still. Right, so we have to see how that's going to behave in there. This breaker is also coupled with the bearish order block. This low, high, lower low, that's also a breaker in itself. So we got a breaker here. And then we also have a breaker here. Okay, so yeah, very sensitive area. So we'll see what it wants to do going into the week, okay? Yeah, moving on to the next, last and final asset, last but not least, the beautiful indices. Okay, so let's look at the monthly chart. So we do have lows in here. We have trendline liquidity below these lows. I think that's asking for a little much to try to see it get down deep into that. But you do see that the previous month's high was taken. So it looks like we are having a bearish power 3 unfold here. We're already almost halfway through the month. So, you know, is this going to be part of a bearish power 3? Given the fact that the last, 1, 2, 3, 4, 5 months has been one-sided bullishness? Is this going to be our bearish month? You know, we're going to see. That huge displacement may have triggered something in. What supports this? Bullish DXY supports this. Right? If this is going to be a bearish month within the last, 8 months, it's been so bullish. 1, 2, 3, 4, 5, 6 straight months. Going into this 7th month, basically after we've been so bullish, I wouldn't be surprised if this does look to maybe target this. That is a bit a ways away, right? So we'll keep that in mind. So yeah, we'll keep that in mind. So, and then again, we got monthly low here. We got a monthly high. Previous month's high was taken. Just note that. Previous month's high. Taken and rejected. All right, so yeah. With that being said, let's actually go over here and do this. And I really don't have previous month's high. Do I really not have that as a template? What the heck? Huh. Interesting. So yeah, we took that. Like I said, power 3 seems to be unfolding here. Going bearish. I wouldn't be surprised. It's so aggressive. I mean, I'm sure you can kind of see the logic too, you guys, why this would be something reasonable if it does want to use this month to reject and maybe dig a little bit deeper. We do have a previous month's high here as well. So we're kind of reaching down into that. So again, there's not really much to look at other than the wicks, right? The wicks from this monthly chart. I mean, we could kind of see the different levels of interest. We can kind of use that. And try to keep it off the chart a little bit. Damn, look how, man, The wick quadrant, the upper 25% of it, tapped right into it perfectly. Literally to the tick. Wild. Absolutely wild. Yeah, we got an order block here on this monthly chart, or on this weekly chart. And we do have small itty bitty gap in there. We have a small itty bitty gap in there too. Order block. There's really not much more other than this. Honestly, we do see something I talked about months ago. This fair value gap that's been left all the way since June. I mean, it's just, that thing's been sitting there for days. That was ahead of the first rate cut, remember? I wanted to see if we could open up and decline into that, then continue to run higher for quarterly power 3 using the rate cut. We have another rate cut coming this month on the 29th, I believe. So wouldn't it be kind of interesting to see them tank this aggressively, maybe reach down into here and then get that double-sized rate cut and then maybe see that push us higher? Remember, the rate cuts are positive for the overall stock market. Like the last, I think it was the last 20 straight rate cuts at all-time highs led to the next 6 to 12 months completing more all-time highs and closing at all-time highs. So it had a 100% strike rate result-wise. So we still haven't forgot, right? We're still hanging on to things that we've talked about weeks ago. Okay, because it's still affecting us. And you can see that assumption of price just continuing to create all-time highs. We were absolutely correct in that anticipation. Right? Does that mean that it can't dig down into here? No. You know, if you go to the monthly chart, us getting down into there is simply just a, normal retracement. If you saw this on the 5-minute, this would not be abnormal for it to try to reach down into that. You would probably expect it to do so. So, of course, it's going to take forever potentially to get down there. We do have levels that we got to attack first in order to get down there, right? Like this order block level here. We got that volume imbalance. Weekly order block. Right, so yeah. I'm going to keep tabs on that level. Then now let's go to the daily chart. So we're going to keep that in mind as a potential large liquidity pool. This is going to be a fair value gap to pay attention to. Again, that's a ways away, so it may take time to get down there. This right here, I mean, it looks like a bearish breaker here. Okay, so the only way that I would be ready to get back in line with buy side delivery is if we were to get above this potential bearish breaker here. We have multiple PD arrays that have been violated. Multiple swing lows. That trend line liquidity that was here got absolutely wrecked. Right, we had one one push above, right? Failure. One push above. Well, not failure, retracement. Push above, retracement. Push above, absolute smash. So it looks like they were accumulating short positions inside this buy-side liquidity pool. Definitely looks like they were accumulating, and then Trump was the excuse. Of course, they use every freaking excuse, whatever they can, to liquidate people. But, I mean, it makes sense why they wipe these people out. Especially, I mean, it was coming. I knew something was coming, right? We've been talking about that, you know, they're not going to go up forever. It's dangerous to be trading at this high of a, you know, manipulated rate. Like, there's no reason for this to be as high as it is. You know, our companies are great, but it's like, just straight up, like we're in $37 trillion of debt. Like, really? Is this what we're doing? But, hey, shit, I ain't complaining. Do what you gotta do. Keep it going higher. But always be ready for stuff like this. Okay? But yeah, so my assumption, given the fact that we basically broke a bunch of different levels, 3 PDRAs have been violated. These down candles basically were order blocks at one time. Or it was an order block at one time. Right? Holding price. Where the hell was... Yeah, right here. Right? Order block, smash, shift in market structure, run on stops. So if this was a 15-minute chart, right, an hour chart, this right here would have been a shift in market structure after taking buy-side liquidity. And now what would we be waiting for? We'd be waiting for a rebalance, right, or retrading into an imbalance. And then try to see if we can't attack the lows or external range liquidity. If we turn and go bearish from this move, lows become external range liquidity, highs become internal range liquidity, and we would look for you know, price to trade inefficiency to stops, possibly to then get us down and target this level down here. You know, we'll see. You know, we'll see what happens. We did hit this. This is a monthly high. Just so for completeness sake, throw that up there. It's previous monthly high. Okay, and then yeah, we'll keep our attention on this. See if this can't hold price. If this is going to be respected and something worth holding on to in terms of down delivery, we're going to treat this low to that high as what? What should this low to that high be treated as? Just let me know in the chat. BPR, exactly. We'll see if we can't get that to be treated as a BPR. So if that is a BPR, should we expect it to close in the entire fair value gap that gets created in here? Or if it does trade into this area, would we expect, or is it reasonable to expect that the whole entire fair value gap is going to be traded into? Or should it just be a quick, you know, slight retracement and it should just deliver quickly? Which one is it? Which one do you guys think? Yes, let me know in the chat real quick. If we expect a BPR to form in there, and let's say it does form a BPR, but there's a fair value gap kind of inside of that, do you expect it to go deeply into the fair value gap? Or should it leave it open? You know, it could trade to the 50% level, but we want to leave most of it open. tiny bit, basically trade into it a tiny bit, or leave it fully open. Absolutely. That's what we want to watch. That's what you want to start expecting when you see this type of stuff. Right? When you're practicing and studying, that's the type of stuff you want to tell yourself. And you want to study how it does this. Because I could say this till I'm blue in the face. Right? I could say this, I could teach this and teach that and do this and do that and, tell you how great things are. But the only way that you're going to have that trust, considering that I can't just download it to your brain and have you feel the way that I feel about things like this or any other topic, you have to go in there and literally do it and get the back-tested notes, right? Like, you have to go in there and do this type of stuff. And honestly, if you want it to be engaging and you get bored and all this stuff, feel free to send it to me in DMs. Let's have a conversation about this stuff. You don't have to sit there by yourself, isolated, and feel like, oh, you're the only one. Like, I'm more than happy to have back and forth conversations about any of the stuff you guys study. I enjoy that stuff. Remember, I'm obsessed. Like, this is my life. Okay? Like, I do this every day and have been doing this for every day for like 6 straight years. Like, it's a very uncommon thing where I'm not looking at the chart, right? At least at some point in the day. It's just the way it is. So I love it. I'm obsessed. And, a lot of you guys also love this industry. And again, if you want to, make your studying engaging, send it to me. And if I'm available, if I'm, free and I see what you send me, we're going to have a conversation about it. I want to see what you guys are learning. I want to see how you guys, are studying. And I just constantly want to know how you guys are doing, because I'm trying to get you guys to get in position so then you can make yourself succeed. Okay? It's the whole purpose and why I spend 2 to 3 hours every weekend. When I could be doing anything else. I sit here for literally 2-3 hours faithfully every weekend. And of course, I'm on live calls with my private group every single day. There's a reason that we do these things. It's not because, I just, want to hear myself talk and whatnot. Like, I'm sincerely trying to give back. I'm sincerely trying to, help as many people as I can. Anyone that listens to me, if they're willing to give me their ear, I'm trying to give as much value as I can from my perspective. Trying to, edify things that ICT teaches so it makes you go and study even further. Not only my stuff and listen to what I'm saying, but ICT stuff as well. Like, this is a forever journey. But, once you know what you're doing, you're going to get to a point where you decide on your own that, okay, I don't really need nothing else anymore. But obviously that takes time, and you got to get to the point where you understand why you don't need any more. And part of that why is obviously having a process for each element that we know is important, which I have a list of, right, for you to kind of have as a cheat sheet. And each one of those 10 or 11 things needs to have a process. And once you have a process for all of them, and you reliably can trust yourself, you understand risk management, and you don't break your rules and your discipline, you'll get to the point where you don't have to really do as much as you once did. You probably will still do more, right? You'll probably still continue like I do. But, I do it because I love it. I love looking at price. I love evaluating the things that I did and how I could be better, how I can be better for you guys, and how I can teach you guys better, I just love it, so yeah, let me see if I missed any comments. Yeah, Tony, it was an amazing move, bro. FVGs, September 18th. Yeah, right there. That's a good observation. It is kind of within the breaker, so, we'll see. Remember, does a breaker come before a fair value gap, or does a fair value gap come before the breaker? This is how you gauge which one's more important and which one you should be paying attention to. If there's a fair value gap that's inside of a breaker candle, the breaker candle's range is going to be more important, especially if it's lower than the fair value gap. That doesn't mean that this, won't fully, get traded to or attempt to get traded to, right? It may dance around that, but as long as we stay below the 50% of this breaker, the breaker is the main thing that's going to start the big move. If it is going to use this as a break in market structure to target these equal lows down here, that breaker level is like that candle is going to be extremely sensitive. And majority from up here to the middle portion, okay, this right here, this level up here needs to be respected. At least that's what I'm going to anticipate. I'm going to anticipate that this upper level from the 50% of this breaker to the high up here of this fair value gap in here, all of that should be left open. So yeah, does that make sense, you guys? I hope that today was insightful. But this is pretty much gonna wrap up my opinion. Very simple, right? Obviously, on the back end, some of the things that we were looking at for the bonds and yields, we got a good feel for what the condition is. We do have some stuff that may be problematic with the bonds and yields, right? We gotta definitely feel out how these are gonna unfold. Looks like the bonds are rallying higher. That goes against bearish indices, right? But what we do see is reverse or a decline here in the currencies. Looks like we may have a breaker in here. We may have reason to believe that this may target the sell side, right? That's supportive of whatever price wants to do in terms of the downside for the indices. And we have the DXY potentially looking like it wants to hold inside these levels and then potentially be used to run to the buy side. So again, we're going to keep these things in mind. In a perfect scenario, if this is going to continue going higher, we would like to see that the indices and the foreign currencies continue to drop. Maybe we'll see some type of turnaround here in the bonds. Maybe the yields sweep these relative equal lows and use that as a rocket ship to blast off from this quarterly bullish order block, right? Remember what we talked about earlier? If you weren't here at the very start of the session, I encourage you to watch from the start of the session because we talked about all these different assets that led us to the opinion that we may end up seeing this turn around. We're not going to be 100% that it's going to turn around, but we're going to feel out this retracement in here and see how that redelivery is going to behave. And if it displaces lower, say it sets this low here, retraces, breaks lower, and gets below this low, I am absolutely confident that we will end up coming down to this level here. Remember, it takes a long time. If you follow my advice and the advice of ICT and how he talks about bias and narrative, or just narrative as a whole, right? Because he doesn't really separate it. But narrative, like the big picture and how you need to stick with the higher time frame bias and overall like direction. If you follow that, you'll understand why breaking down below this low here would be the real main catalyst for me to trust it's going to go lower, especially because the rate cuts we've had have been promoting this massive rapid repricing to the buy side. And all the things going on in the world, right? Anything can, on the drop of a dime, skyrocket or sink the market. Bombs drop or wars and economic this and all, just so many things that we're trading with. It's causing massive volatility. Because that's the case, you want to be extra demanding. Okay? Remember what I said at the beginning of the call too. 2,000 plus people are no longer living because of what happened in the markets on Friday. In less than 24 hours, over 2,000 people murdered themselves. Right? Like, that's insane. So just know, we're in some of the craziest volatile markets and environments we've ever seen. It's kind of been that way since the stupid 2020 virus. Things have just been chaotic ever since that time. So ICT's mentioned that it's the most difficult conditions he's ever seen. Doesn't mean there's no opportunity. Doesn't mean you should be scared. But what it should mean is any of the good logical rules that are risk related, you should obviously take them to heart. Okay? As far as gold and silver, I think that we are just going to continue to march to all-time highs. I can't remember if we breached 4,000 yet. When it comes to the commodities, though, I'm definitely thinking that we're like I said before, last week, there's nothing in the world right now telling us that these are going to slow down. Yeah, we've already breached 4,000. Looks like I was right about where that was headed to. But yeah, I don't think, unless only just like a small slight retracement, there's nothing that's going to stop gold from just absolutely ripping to the buy side because of all the uncertainty with the dollar, all the talks of BRICS, all the talk of debt continuously piling up in the U.S. It's the strongest flight to quality that there is. It's pretty interesting how I called oil and gas too, and it's just absolutely been staying in line, continuing to drop. It's pretty beautiful. Brings a tear to my eye. It's amazing. Yeah, I had oil and gas perfectly. I mean, it couldn't have gotten more perfect than that call out. That was absolutely amazing. I might have to start trading some of these other assets because I'm just like, why not? You'll get to the point where you're like, should I? Should I? Oil and gas are pretty massive. And like bonds and stuff, you trade the bond market. I think it's like $30 per point. It's faster than the NASDAQ. Oh yeah. Yeah, imagine if you just like pick something like this to swing trade or put an options trade behind. I don't even know. Do they have oil options? Probably. They probably have some of that. But yeah, we've been absolutely correct on every one of the calls that we've talked about from all the different assets, from DXY, currencies, commodities like gold, silver, oil, gas. I mean, we could probably even start to mix in others like coffee, wheat, soybeans. And it's all the same stuff. Everything that I use and talk about, the whole process, all the timing, everything. And the liquidity pools we're looking for. I mean, it's all universal no matter what you trade. And it's just, I mean, I don't know how many times one could say how perfect things are, how amazing they are. Not that I'm perfect, but the call-outs are absolutely as close to perfect as someone that's not ICT can be. You know, I can't remember the last time I called out a direction with the market, with all of you guys here, like always with me, where I got it completely ass backwards wrong. I don't think there's been one time this year. Yeah, maybe there was one time where it kind of just like consolidated or retraced against something, but then went right back in line with the overall narrative. You know, I mean, can y'all remember a time? Well, you guys are with me all the time, so you would definitely know. But it's just been fascinating. Yeah, if there is a time, definitely let me know. If you remember any time that we may have just completely got it ass backwards, incorrect. But yeah. Maybe think about it and let me know later. Don't try too hard, because honestly, in all reality, it doesn't exist, right? That's just kind of been the way it's been this year. But yeah, so hopefully that answered your question about gold, Fritz. Tony, I know you look at commodities too, so hopefully that's helpful to you as well. So yeah, we'll just continue to watch any decline, continue to try to seek external range liquidity, right? Internal range, we're going to look for external range to be targeted. If it uses this order block here, it may look to dig a little bit deeper, right? Maybe it looks to target a little bit more of this liquidity down here inside this order block. But or maybe even just comes from this low to that high. Comes down to, we're kind of at equilibrium. I don't think it's going to go much deeper than this fair value gap. And I think it should be able to continue to rally. I mean, things that are happening right now with tariffs and all that, I think that's actually a good thing for this type of stuff, for commodities like gold and silver, because there's more uncertainty. Oh my gosh, the world's ending. Oh my God, tariffs. Oh, right? Like that's the vibe they put on this, but there's really nothing to worry about. Short term, maybe there's a little bit of pain. Prices may increase by $2 or $3, right? Like tariffs have been placed all year, and prices haven't increased. They've just been the same because of where they were at with Joe Biden and everybody else that's in that cabal of people, who recklessly kind of threw our economy around. Inflation up like 50% at one time. I was paying literally $8.50 per gallon for gas at one time during that administration. I mean, I've never seen such irresponsible behavior. No one's ever done that as president, but thankfully things are somewhat coming down, and hopefully, we don't get a bunch of lunatics taking over anymore. Hopefully everything goes well with this current administration too. So for the benefit of everybody. But yeah, we'll see kind of what this tariff thing is going to do to the gold prices. I'm not too sure. Right? I think it should just continue because, like I said, the fear factor. Everyone's so worried about everything. Gold is a fear-loving asset, right? If the economy has fear, gold's going to freaking skyrocket. There's some predictions that this can get up to 10K per ounce, which would be pretty insane. I have been saying buy gold and silver. I've been telling everybody buy gold and silver, like physical, for a year and a half. And then, ICT said it as well. Because of all the war, because of chaos in the world, right? Chaos in the world means commodity supply and demand is going to be messed with. Okay, the interest in things like real assets is going to be extremely high value, and because that's just the way it is. Commodities are real assets, and when all else fails, this stuff's been around forever. So whenever there's chaos, wars, things going crazy in the world, gold and silver, other commodities are going to absolutely explode because they're a flight to quality outside of the dollar, which it's been treated pretty poorly over the last couple decades. So we'll see how everything turns out. But yeah, so again, hopefully you guys got value from today. Hopefully I answered a lot of your guys' questions. Hopefully that answered your question with gold. Let me see. Okay. All right, for sure, Tony. But yeah, it's been amazing, right? All the call outs we've done. I hope that this year has been very eye-opening for a lot of you that may have just started with me. Any of you guys that are new, definitely spend some time with us every Sunday, every Tuesday. I'm sure you'll find a home here in the WMG trading family. We are highly precise, highly accurate. I do it publicly. You see me doing it. I have people in the chat that would call me out if I was a liar. They're here with me every single day. They're very vocal. They're also making progress themselves. So it's an amazing community. You guys are amazing students. I'm humbled every day that I get to sit here and talk with you guys. I appreciate you guys always updating me. I appreciate your continued support. And again, I hope you continue to give value, and I hope you guys enjoy the rest of your weekend. We will be live again on Tuesday for our one live trading call per week. Those of you in my private group, as always, will be live every single day. And we'll see what we can come away with this week and see the damage that's going to unfold, and whether what we talked about today is going to be correct again, or if we're going to have to slightly adjust. But I think that things should be pretty dynamic this week, unless they want to come back and really pull against this huge decline. Yeah, I got that same message. I didn't execute anything in my Apex or Top Step accounts, but I got an email from both of them. So I'm sure people were trying to take advantage of it, but you can't want to get involved with that. If you had like a prop firm, you got to remember they're not willing to put you in that. They're not willing to allow that. And they'll say it's because of safety or whatever. A normal broker would do the same thing. It's just when it moves too quick, there's not enough orders that they can pair with your order. So order pairing, right, having a winner and a loser becomes nearly impossible. So they just can't do it. So they will deny you, or they'll slip you in, right? So you'll enter, say you'll try to enter up here at the high, but it drops down aggressively, and there's no buyer or seller, or if you're selling, there's no buyer at a particular level you're looking to enter because it just moved too quick, or maybe it gaps, right? In that case, you may not get triggered in, or they may slip you in where there is an area in price where there is a buyer and a seller. So this is the risk playing games in this type of situation. If you see something like this happen, you need to wait 20 to 30 minutes and then look to try to participate, because then things will kind of mellow out. Maybe it kind of blows past and doesn't really do anything as a result of that. That is a risk when you try to engage something like this. But just some things to consider. You know what I mean? And this is like the realities of certain circumstances in the market. Sometimes they just won't allow you to enter. Again, if you are in something like this and say you were looking to buy, right, and this thing just punched you in the face down, one candle went 100, 200 points, or maybe even 1,500 points. You think that's not possible? It is. You would have to eat that. Your stop loss would not be respected. You'd probably liquidate your whole account, maybe even go into debt with a broker. Unless it's a funded account, then you just lose the account. But yeah, this is a risk in this type of environment. So again, like I said at the beginning, some tragedies happen because of what's happened the last couple of days. People taking their own lives. Don't let yourself be put in a reckless mindset. Okay, don't over leverage, don't over trade, and I assure you, time will do all the heavy lifting. Especially because you're here, you're in a place where it's proven that the stuff works. It's undeniable. You don't have to sit there and think, oh, well, does it work? Does it not? I prove it. ICT proves it. Hundreds of thousands of other ICT traders that are public prove it. So, you just need to focus on what you're doing. Focus on what's being taught. Ask questions. Try your best to get those questions answered. And, just be engaged in the community and continuously study. Okay? Like right now, I'm going to see if there's any one-on-one calls I got to do today. I have one scheduled, but rescheduled. But if I'm not helping my students, I'm going to study for like the next 6 hours. Okay? And then once I'm done with that, then I'll figure out whatever the hell I want to do. Give yourself things to do. You can always go back and study previous weeks. You can always go back and study concepts that you feel you already understand. But you want to take this serious. Don't let your weekends expose your weekends. If you're not where you're trying to be, there's work to do because the clock's ticking. Okay? Tick, tick, tick. We're not getting younger. And your life in 5 to 10 years is going to be a direct reflection of the actions you either took or didn't take today, and this year, and maybe last year. Success is delayed in many cases. Overnight successes take years to take place. So in order for that overnight success to happen, you got to do the work right now. So then eventually the exponential growth, exponential leap from not being super successful and profitable to being profitable and successful, you can take advantage of your stuff. It's going to take that hard work. I just saw that Tony turns 50 tomorrow. Amazing, Tony. Happy freaking birthday. Big 5-0. It's amazing. Amazing, amazing, amazing. Man, I hope God blesses you and you have an amazing day tomorrow. Let me know how it goes. I definitely want to hear all about it, right? Be safe, right? Hope that you spend a lot of time with your loved ones and really enjoy that, because that is a huge achievement, right? It's a big-time milestone. And you're only halfway there, Fritz, okay? You're halfway there. You got so much time left. This is what people don't understand. Life is much longer than we think if we take care of ourselves and stay healthy and, eat well, work out. So there's lots of life to live. But the clock is ticking, and you want to get there sooner rather than later, right, to success, because you want to be able to enjoy it. You know what I mean? It doesn't mean rush, right? But it means definitely take your time when you're studying and do it properly the first time. Spend as much time as you can to be as good as you can, and be the best that you can, so you can, get to where you guys are trying to go. But yeah, happy almost birthday, Tony. Congratulations. You are blessed, absolutely. And I hope you enjoy your day. All right, I hope you enjoy your day tomorrow. And hopefully all of you guys enjoy the rest of your Sunday. Let me know if you guys need any help. Like I said, keep me updated with all your guys' progress, whether you're here on YouTube or in my private group. I always like to go back and forth with you guys, because you guys are the reason why I do this. Otherwise, I would just be doing this by myself like I was. And it's great and all, but I like seeing others succeed. So it's something I really enjoy. So yeah, with that being said, God bless you guys. Keep in mind some of the things that we talked about today. Remember what we talked about in terms of what our opinion is. Hopefully you guys got value from today. Don't forget to like the video, subscribe to the channel. We'll be live again on Tuesday. And yeah, with that being said, until next time, I will catch you beautiful, beautiful people on the next one. Have a good rest of your weekend, guys.